Some lenders haven't gotten much love from investors in recent years. LendingClub and competitor OnDeck Capital have both dropped more than 70% since they went public in 2014. But Pimco-backed GreenSky is banking on a different trajectory. Just went public on the Nasdaq, raising $874 million in its IPO. The online lender sold at $23 a share, driving its market value up to $4.35 billion. Bloomberg's IPO reporter Alex Barinka caught up with GreenSky CEO David Zalik.
GreenSky is a digital commerce platform. We power commerce at the point of sale for a growing ecosystem of merchants, consumers, and banks. We enable 12,000 businesses the ability to offer instant promotional credit and now serve almost 2 million consumers. There's a large and growing opportunity to accelerate commerce at the point of sale.
So when I do think of what the public market is used to in terms of past lending platform companies, LendingClub and OnDeck, that trading in those two stocks effectively spooked the market for your industry. How did you differentiate yourself? How did you distance yourself from those two narratives, which have not been well received by the street?
We're about commerce, not credit. We enable over 12,000 businesses the ability to offer instant promotional credit to almost 2 million consumers.
And so you got your start mostly in the home loan business. For consumers who are looking to do home improvements, you're moving a bit into elective surgeries. Are those the areas that you're focusing on now? Where can investors expect you to push into next?
We have tremendous opportunities for growth. We have already had tremendous success in home improvement. We now have a rapidly growing elective medical business, a growing e-commerce business. Expect to see more verticals and more announcements to come.
David, your company's based in Atlanta. I grew up in Dallas. I know how folks love to improve their homes. Being outside of the Valley, being outside of New York, was that a strategic decision for you? Did that help you in terms of how you thought through development of your company and development of the product over at GreenSky?
You know, I'm grateful to Atlanta and Georgia. I moved there 22 years ago. What an incredible place to do business, to build a culture of service. I'm really pleased that when we started this company, it was all about creating value for our customers, our constituents, our people, and I'm really gratified that after all these years, that is being recognized. We really look forward to the years ahead.
And when I do take a look at your financials, you do have about $140 million in net income last year. Profitability is something that it continues to be a bit of a surprise for some startups, but you managed to get there. What was the thinking like? We see a lot of spending for growth at the expense of that bottom line. How did you manage your company in the past years that you've been operating to get to profitability pre-IPO, which again, seems to be a rarity these days?
Well, we think profit and cash flow never goes out of style. When we started this company 12 years ago, my partners and I bootstrapped it. We took every dollar we ever had. We borrowed money for years and years, so every dollar mattered. We weren't spending someone else's money. We were investing our own, and we were dedicated to creating value for our constituents and our customers. But when you have a technology platform, which is what we've built, and you create so much value for each member of our ecosystem, you can build a business, grow a business dramatically, and generate profit.
And that ecosystem being customers, the banks that are lending, and the merchants. As you think about your expansion in your existing markets and the home improvement lending and elective surgery markets and e-commerce, how much manpower, how much people capital in sales and marketing do you have to spend to get more of those three counterparties onto the platform?
You know, what's wonderful is now we're experiencing a tremendous network effect. You know, frankly, a majority of the businesses that join our network are referred to their colleagues and friends and sometimes competitors. So we're certainly very gratified by that. We spend less than 5% of revenue on sales and marketing. And that's what happens when you have an ecosystem, a network, and a value proposition that really creates value for businesses, consumers, and our bank partners.
And David, you know, the chatter continues about the potential turn in the credit cycle. How do you think through where we are in the cycle right now? Are there things you're doing to prepare GreenSky to keep running your business if we do see a negative turn in the credit cycle?
Right. So GreenSky is not a lender. We're not a balance sheet. We're a technology platform. And we know that not if, but when a recession happens, commerce will continue, purchases will continue, and in fact, credit will become even more important to consumers. Our bank partners are committed to growing through the cycles a quality, profitable, durable business.